Every time the stock market hits an all-time high, the same fear shows up. You open the chart, you see that vertical climb, and you think, if I buy now, I'm going to be the person who bought the top. It feels reckless. It feels dangerous. It feels like everyone else got in early and you're late. But here's something most people don't realize. Historically, the market spends a lot of time near its all-time highs. That's not a warning sign. That's what long-term growth looks like. So in this video, I'm going to show you why investing at all-time highs isn't crazy, how to protect yourself emotionally and financially, and how to use low-cost index funds like VOO and QQQ the smart way in today's market. Let's break it down. So should you invest right now? In my opinion, yes. But here's what you should not do. Don't dump your entire savings into the market in one day. That's how fear controls your decisions. Instead, use dollar cost averaging. Let's say you invest $500 every month. If the market drops, you buy more shares. If the market keeps going higher, you're still building your position. If it moves sideways, you stay consistent. You remove emotion. You remove guessing. You automate discipline. Now here's the part most people miss, and this is very important. You shouldn't just keep an emergency fund. You should keep strategic cash. Yes, keep 3 to 6 months of living expenses in a high-yield savings account. That protects your life stability. But beyond that, consider holding additional cash intentionally so that if the market drops 15%, 20%, or even more, you have dry powder ready. Because when you know you have cash ready to deploy, two powerful things happen. First, you don't panic sell because you're not financially trapped. Second, you actually feel excited when the market drops because it becomes an opportunity to buy quality index funds at a discount. Cash isn't just safety. It's psychological power. It turns fear into opportunity. Now, let's talk about where to invest. Two of the most popular low-cost ETFs are VOO, Vanguard S&P 500 ETF, and QQQ, Invesco Nasdaq 100 ETF. Here's the difference. VOO tracks the 500 largest U.S. companies. It's diversified across sectors. It has a very low expense ratio, around 0.03%. This is the steady, proven wealth-building machine. QQQ tracks the Nasdaq 100. It's heavily tilted toward technology and innovation. It tends to grow faster in bull markets, but it's also more volatile during corrections. So, which one is better? You don't have to choose. Many investors use a core and satellite strategy. 80% in VOO as the stable core. 20% in QQQ for additional growth potential. That way you get diversification and long-term stability while still participating in innovation and tech-driven upside. You're not betting everything on one sector. You're building intelligently. Now here's what really separates successful investors from everyone else. It's not stock picking. It's not predicting crashes. It's emotional control. People think the biggest risk is, what if the market crashes right after I invest? But the bigger long-term risk is, what if I never start? Imagine reaching 60 or 65 and realizing you spent 20 years waiting for a better entry. Markets don't reward hesitation. They reward discipline. All-time highs are not rare events. They're a natural feature of a growing economy. Over decades, businesses expand, profits grow, innovation happens, and markets trend upward. Crashes will come. Corrections will happen. But if you're using dollar cost averaging, holding strategic cash, and investing in broad low-cost index funds, you're not trying to predict the future. You're preparing for it. Time in the market beats timing the market. Consistency beats prediction. Preparation beats panic. So don't let all-time high headlines scare you into doing nothing. Start small. Invest consistently. Keep your emergency fund. Hold strategic cash so you can buy the dips. And build steadily over time. I'd love to know, are you Team VOO, Team QQQ, or a mix of both? Let me know in the comments. If you found this helpful, please hit the like button. It really helps the channel grow, and subscribe for more investing strategies and market insights. Thank you so much for watching, and I'll see you in the next one.